Hello, everyone. I hope you guys had a wonderful start to the week so far. Happy election day. Tomorrow, we're going to find out basically who the president is. So that is definitely going to affect the market. In today's video, let's just quickly go ahead and take a look at what can actually move the market. It doesn't really matter who the president is. The market is going to move depending on certain factors, in my opinion. So we're going to look at those factors right now, okay? One such factor is the 30-year bonds. Now, the bonds, very, very important to look at. The bonds have a correlated relationship to the market. If the bonds are bullish, then the overall market is also going to be bullish. Currently, you can see that the bonds are trying to bottom themselves out. If the bonds can start to close above major levels of resistance and start pushing upwards, this is going to be bullish for the market. Currently, the fact that it's chopping around like this is not the most bullish sign, nor is it the most bearish sign. We're clearly at a level of support after a big move to the downside. Technically speaking, we should be getting a bit of a bounce. If we don't, this is going to be very bearish. I would be very shocked to see if the bonds don't end up bouncing a little bit. But currently, the bonds are showing support. We're holding this level of support. If it holds and breaks, then it's going to be bullish. So we're essentially neutral on the bonds currently. The VIX is much more important to look at right now. And the VIX, like I've been saying, needs to hold this 20 to 20.5 level. And what do you know? It literally held 20.5 to the dot. And the reason why the VIX is important is because when the VIX is inversely correlated to the market. If the VIX does well, if it's holding support, then that is very bearish for the overall market. And essentially, we held support after a major green day today on the overall market. We were pumping. The market in general was straight green the entire day. The VIX still held support. Now, this is important because it means that this move to the upside in the overall market, the VIX is not yet completely convinced. It's not convinced yet of this move because it's not convinced yet in the move of the overall market because it's still holding support. Had the VIX closed below 20 and it started knocking on 19, etc., then it would be a much better chance that the overall market would end up continuing to bounce. But the fact that we bounced so heavily on the overall market and the VIX is still holding support is not an amazing sign for bulls. Okay? So we have to keep monitoring the VIX. This 20.5 level is very, very important for a continued move to the upside in the VIX. And if the VIX rises like this, the SP500, the NASDAQ, all of our favorite tech stocks most likely should be falling. Okay? So there's that for the VIX. So here's a chart of the S&P 500 futures, right? And so currently, we see that the MACD, the slow MACD indicator, is trying to flatten itself out, and a lot of it has to do with the blue line basically really getting a big green candle today. So because of that, it looks like we're about to cross to the upside on the ES. Now, for a continued bullish move to occur, basically if we end up breaking above 58.70, 58.60, and we get a solid close above that level, then we could eventually see 6,000 on the ES. One other interesting thing that I see a lot right now is people are talking about the put to call ratio. Now, the put to call ratio is generally when the put to call ratio gets very high, it breaks above 1.25, 1.30. That signals a bounce potential in the market. It means that there's way too many puts in the market versus calls. So this is still not yet really at like an amazing point in the market. Yes, we have bounced prior, right, when we did get to these levels on the put to call ratio. But in my opinion, like there's a lot more room to the downside in the market. And with that being said, there's still a lot more room to go to the upside on the put to call ratio before something like this ends up being a bottom, in my opinion. A setup like this generally doesn't look like it is really bottoming out. I mean, clearly it does, right? We held support, etc. But this is it doesn't look completely bullish because the large tech stocks are also showing weakness. Some of the large tech stocks are also very overextended. The VIX is holding support still, and the put to call ratio still has a lot more room to go before this becomes a bounce. Whereas in the past, what people have been doing is they were looking at the put to call ratio, and they were basically looking at it at these small points where it would be like, oh wow, we're above 1 on the put to call ratio, we're above 1 point. That's great, congratulations. But we just broke into new highs, right? And based off of these new highs, there should be a bit of a lower move, similar to what we basically see in July and August. There should be a lower move. At that point, if the put to call ratio is high, then that makes a lot more sense. Right now, not so much, in my opinion. Not so much. So with that being said, with the S&P futures, with the NASDAQ, they all look very similar right now. The Russell, all of these look very similar. The issue is that there's some large tech stocks that are still showing weakness. So, for example, Apple, we're not yet bouncing as aggressively as the S&P, as the NASDAQ, as we are in Apple. Amazon is showing some strength, right? But Amazon is closing and opening outside of the upper level of the Bollinger Band, which is overextended. NVIDIA had a bit of a green day. That's great. AMD is showing weakness. Netflix is basically, showing some strength, etc. But Microsoft and Google are showing weakness. These are not strong setups, really. Like if you were to go long, it's like there's just so much underlying weakness in the market. It's just the fact that this strength is not permeating into these stocks is alarming. That's the only issue. These stocks should be rallying. If the overall market, so here's the thing. If the overall market was genuinely very bullish, Microsoft, Google, Tesla, Apple, all of these stocks would be doing phenomenally. We're not seeing that right now. And the VIX would also be dropping below support. That's the main stuff that I'm looking at. Those are the things that I'm taking into consideration. And this 5870, 5860 area is going to be very important on the SPY, on the ES. So with that being said, you can't automatically just be. It was much easier. Here's the thing. It was much easier to be bearish at these highs. That's when it was so easy to be bearish. Right now, we are in literally the middle. We are in the middle of the highs and the lows. Does it make sense to go short here? No. Does it make sense to go long? Like I was saying yesterday, there was only 2 trades that you can make. Either you go long or you wait for a retest at a level of resistance to be safer. We're approaching those levels now. So tomorrow, the day after, we're going to see how the market responds to this election news. We're going to see how everything plays out, and we're going to take it from there. So, but yeah, definitely, like I was saying yesterday, it was not the time to be bearish. It made all the sense in the world for bears to basically cover, to want some sort of a better shorting opportunity. And that is what the market is currently giving. So the only issue, right, for a continued move to the upside is the VIX. The VIX and the continued weakness in these large tech stocks. So I hope that made sense. I basically gave like a nice little rundown over the last minute. If the entire video didn't make any sense, just rewatch the last minute and a half, basically. And yeah, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.